Today on the show, we have Sam Kazemian, the founder of Frax. We're going to talk about a lot of cool stuff today. Welcome to the show, Sam.
Thanks for having me, Patrick. It's great to be on.
Yeah, it's an honor to have you. I've been a fan of Frax for a while. Funny enough, actually, before I even had a YouTube channel, I won some contest. I was like to have my question featured in. I think it must have been an interview with you. It was an interview with the Frax team back in 2021, and I won like $50. So
Oh,
thank
nice.
you for that. I think
OG.
it was a collaboration with Pangolin, and they gave like $50 to questions that were selected. So um, thank you for that. But a lot's happened in the 3 years since then. Um, Before I go any further, why don't you introduce yourself for people who aren't familiar?
Yeah, for sure. So, my name is Sam Kazemian. I'm the founder of Frax. Frax is the decentralized central bank of crypto. That's like the one line vision. And we issue right now like two important assets: Frax, the USD pegged stablecoin, and then Frax Ether, our LSD essentially. And recently we launched Fraxtal, our modular rollup. That is a general purpose rollup chain, kind of similar to Base, to basically bring the actual central bank vision to life. Yeah.
Awesome. Yeah, and we're definitely going to talk more about those. And just to give people a sense, what's the market cap of Frax stablecoin right now for total supply?
I think around like 700 million right now, something
700
like
million.
that. Yeah, if I
Yeah, I
recall.
think it's one of the larger, one of the largest actual non-centralized ones, right? Or non-fiat backed
Yeah,
stablecoin.
it's the second oldest after DAI, and I think it's like the third largest after DAI and currently Athena, I think. So
Hmm.
definitely up there in terms of DeFi integrations, kind of Lindy, and like you said, the brand is well known, and we're pretty much everywhere. Kind of the vision is that anywhere in the multi-chain era that we're in, and in the next 2 to 5 years, I think there's going to be like thousands of like chains or app chains or L2s, L3s, based rollups, whatever you want to call them. And the goal is two things. One is almost anywhere that you are that has economic activity. Hopefully, you are interacting in some way with a Frax asset, or the Frax assets power some kind of yield underlying that financial system. And then number two is that Fraxtal itself, the modular rollup, would be a top five chain in the coming years for its diverse DeFi and ecosystem that powers all the dApps that are currently building on it.
Cool. Yeah, and I definitely want to dive into that deeply in a bit. Uh, First, just to learn a little bit more about you personally, how did you end up in DeFi?
Yeah, so my story in crypto goes a while back now, actually over a decade. When I was at college at UCLA in 2013, I found out about like Bitcoin, just like some people were talking about it, and I got down the rabbit hole of mining the original script coins. I was one of the first miners in Dogecoin and all of those. Coins. Many of them don't even exist today, but it was a good hobby in college, and was in crypto since then. I remember when like Vitalik introduced Ethereum, and it was super confusing for people to understand. After college, I founded Everpedia, and then it's rebranded as IQ now, which is a decentralized knowledge base. Now it's actually powered with AI on-chain agents and intents, and my other colleagues run that, and it's doing really well. In 2019, I actually started working on what would become the final idea of Frax. And the reason I was really interested in stablecoins and what became DeFi back then, people didn't call it DeFi, was that basically all throughout like the prior like 5 6 years, everyone thought people would be buying like their coffee with Bitcoin and all these things. And that was not the case, even though it was called cryptocurrencies, right? It was kind of a misnomer in the sense that uh, no one uses them as a unit of account or as money. They use them as investment assets or a store of value, one of the other uses of money. And I got really interested in stablecoin design, mechanism design, and we launched Frax in late 2020, kind of on the tail end of DeFi summer, but then the beginning of the kind of glorious prior cycle of crypto. And Frax has been growing and kind of expanding the decentralized kind of empire, so to speak, since then.
Interesting. And you talked about building you said central bank of crypto,
Decentralized central bank. Yeah,
I was
basically
going to say,
like,
should I call it a decentral bank? Yeah. So how does everything fit together into that?
yeah, actually, fun fact, the code name for Frax before we came up with it was called Decentral Bank, Decentralized Central Bank. And the reason we changed it was like Frax is obviously easier to say, easier brand to build, but also back then, Anthony D'Iorio, one of the Ethereum co-founders, had this VC or something called Decentral. And we're like, well, we don't want to be, it'll be hard to separate those two things because they're not at all related. So just a fun fact on the lore, the vision is still the same. In fact, it's been called decentral internally since the earliest days.
Interesting. And so you've got the stablecoin, liquid staking token, the modular rollup, the lending. Is that right? Lending protocol.
Yeah.
Still.
So yeah, Frax Lend, and
Yeah.
we have certain sub protocols, but one of the main things I usually like to actually highlight is like a lot of people think, oh, Frax is doing a lot of stuff, or it's kind of a little complicated and things like that. It's not really actually. I think part of the issue is that people think for example, we launched Frax Lend to you know. Compete with Aave, for example, or things like that. But we actually have these because they're monetary policy levers for our issued assets. So like Frax, the USD peg stablecoin, the LSD, and things like that. And so, for example, lending market is a credit facility, right? You're able to actually generate debt, right? And you're able to actually issue your currency, like a USD peg stablecoin, against over collateralized loans, right? And the way that we think about these is that we have contracts called AMOs, algorithmic market operation contracts, and so governance passes these with like different caps, and they're able to mint Frax into these different places like Frax lend pairs, or even in Aave as well, or other lending protocols. And the way to actually think about Frax is that the central components are its issued assets, and all it is doing is distributing those assets, like that currency, across different places. That's our kind of central vision, and we're not actually building any of these kind of supporting features, so to speak, like FraxLend or FraxSwap and these things to compete with Uniswap, for example, or to compete with Curve. That's why we have such good partnerships with Curve, and we, use Aave and all these things. And so I think economics and mechanism design is a little hard for people to kind of reason about or get the whole picture, because it's a lot of things that it's like invisible forces, right? The kind of invisible hand. And so a lot of people kind of see on the Frax UI, a bunch of buttons, and they're like, oh, this is a little complicated. The vision is actually pretty simple. The vision is there's these important Frax assets, Frax, USD, peg stablecoin, Frax Ether, and the goal is to get them used in as many places as possible, right? If you have a USD stablecoin, the most important things are people are using it for money, sending it as transactions. We use it internally, obviously paying the DAO salaries and everything, and other DAOs and everything use it. We need to be able to generate debt denominated in the Frax USD stablecoin, right? That's a very important thing to have credit. And then lastly, there's the yielding version of Frax, S-Frax, right? And that is for savings, right? It gets the a APY that is similar to SDI, or like people are probably familiar with Athena and things like that. I think right now it's actually higher than both of them. And then that comes from revenues from the protocol and or RWA systems like T-bills and other strategies. So the idea is just distribute these assets in as many markets as possible. In fact, you could even think of it the extreme other way. Pretend that like Frax has absolutely no smart contracts other than the Frax USD stablecoin and like Frax Ether and stuff, and the only way to have it work is through these AMO smart contracts, things that like minted in different places. That is kind of how you should be thinking about it in your mental model. It's a currency that is distributed in many different places, and the economic levers are pretty much anything that is passed by the Fraxtal, which is VFXS holders. FXS is the governance token of the entire kind of decentralized central bank. And this is actually a super new concept, right? Like when we launched Frax, there was basically a few ways or theories of how stablecoins would work, right? There's obviously the fiat stablecoins backed one-to-one by USD in a bank account like Tether and Circle. And then there was MakerDAO's, everything is generated through over collateralized loans. And then there was kind of the super duper kind of crazy stuff that obviously didn't work well at all, like Terra, which was basically backed only by its own token, or Basis Cash, if people are familiar with that, is basically also unbacked, and it had this like share bond system that was just completely internal, not backed by anything outside. Obviously, those don't work. Those don't exist today. The whole idea with Frax is that there is exogenous collateral, meaning things that back it, like over collateralized loans, similar to Maker, and also protocol-owned liquidity. Basically, the collateral is out in AMMs like Curve, like FraxSwap, right, our own, that allows rebalancing through TWAMs, right, and everything else. And so you can have this stable coin that's backed by safe exogenous assets and is distributed across the entire, digital economy, right, on-chain economy, through different types of monetary policy levers that the FXS governance token and voters approve of, like lending caps, protocol-owned liquidity caps, right, like minting Frax into Curve Pool so people can buy them there, right, and then they buy them with the collateral of the other side of the Curve Pool, like USDC, like DAI and things like that. And that actually allows Frax to work in positive sum with a lot of protocols. It's like, think about being able to work kind of directly with the Federal Reserve. You usually can't, right? Like the whole point of kind of the traditional financial economies, like the Fed is kind of, neutral behind the scenes, and then they kind of show up once every month and like make a press release about what the interest rate's going to be, and like that literally affects the price of money, right? Like Jerome Powell comes out and says, we're raising rates by 25 bips or something, and then everything dumps, right, in the stock market or like the crypto market, right? And that's all they do, right? But imagine if for example, the Federal Reserve was built by a bunch of builders and like entrepreneurs, and then they actually worked with the economy, right, as that economy actually grew, right? The on-chain economy is very young. It's obviously not old and mature like the US economy, right? And imagine if they work directly with people. That's kind of the way that I like to think about it. And actually, I think that mental model helps people understand what Frax actually is. They think of it usually at first like, oh, they're just doing a bunch of stuff, and I kind of don't get it. But it's actually a very different way of looking at how to distribute a currency on-chain in a digital economy in a transparent manner, in a governance-controlled manner, in a decentralized manner. And that actually allows projects to partner with us. And basically, that's why Curve works very closely with us. We have a lot of protocol and liquidity there. That's why Aave recently released SFrax collateral available through its governance process. And for example, we can have an Aave AMO, so that Frax is minted in the Aave lending markets, right? And people can take that Frax out into the open market by over collateralizing it with all of the different assets that Aave accepts, for example, right? And so it's actually a very elegant system once you kind of put your mind to how we think about expansion.
That is really interesting. Yeah, that analogy definitely makes it click for me. I often like to say that being in crypto or blockchain, whatever you want to call it, it's almost like you get to speed run different economic scenarios because oftentimes blockchains will act like an economy where you have stimulus, you have booms, you'll have recessions localized, and sometimes it can occur within weeks or months rather than decades. And so thinking of Fraxen as a central bank within an economy makes a lot of sense to me.
Yeah, the good and the bad, right? Like a lot of people learn stuff the hard way in crypto, right? Like Terra and other kinds of things. But it's an open experiment. Obviously, these are basically financial experiments. And one thing I will say though is that as Frax has gotten older and become more important, what we're trying to do and what we want to create in terms of a culture is more safe reliability and Lindy effect. For people that don't know, Lindy means like the longer something's been, alive. Essentially, the chance of it staying alive is higher, right? And the reason for that is if everyone's using Frax on different chains, on Fraxtal, on Ethereum, and there's all these liquidity pools and everything, everyone kind of depends on the safety of this protocol, right? And one of the things I'm really proud of is that there hasn't been any hacks or anything in the Frax ecosystem of things that we've built directly, so that the idea is that once your currency is more and more systemically important, you want to make it safer and safer because more and more people depend on it, right? And so some people probably remember, like yourself, early when Frax was partly algorithmic and things like that. Now it is a full exogenously collateralized system that governance passed to move Frax to full collateralization, right? And so that's basically on the roadmap to making Frax safer and safer and safer as it gets older. In fact, I think even above 100% collateralization in the future is what we should shoot for. And same thing with the Frax Ether LSD. It's obviously fully backed by ETH 1-to-1, just like Lidos ETH, just like Rocket Pool and all of these other LSDs. And I don't think we should change that design. In fact, I think we should continue to make sure that it's as safe as possible, which it is.
And was that move to being fully collateralized, was that prompted by UST?
It was obviously hurried by UST, but I think the idea of it in concept, like I said, the longer we're out and people use it, that feeling was there pretty much after 6 to 8 months of release. And obviously, whether UST happened or not, I think today in 2024, we feel pretty much the exact same way.
Got it. Got it. Let's talk about Fraxtal a little. So you guys launched your own rollup or layer two. I forget which term do you prefer, layer two or rollup?
I think we call it a modular rollup because we
Mhm.
have a few different changes. Like the DA system is an aggregated DA. We can actually push data to multiple places to keep the costs of Fraxtal extremely low. Like swaps and transfers are like under like a tenth of a cent or something like that, and it's not dependent on Ethereum gas fees or blob fees. And we have other kinds of incentive systems that we've built for Fraxtal. So, for example, we have this thing called block space incentives, meaning that anyone that deploys a contract, depending on how popular that contract is, there's an algorithm that basically checks across time as the blockchain is used, how much that smart contract has used the total amount of block space of Fraxtal, and that's how Fraxtal points are distributed. Fraxtal points are distributed based on block space incentives. So we call them flocks, the flocks algorithm. And the idea is like anyone that builds a really popular application or protocol that uses a lot of the block space of Fraxtal over a long period of time, they should have a substantive amount of the Fraxtal points emissions, right? And the reason this is actually very difficult to game is that as more and more block space is used by normal economic activity, if you, for example, are trying to game it, right, by just deploying contract and just paying gas, right, like just paying your own gas to your own contract, you have to consistently keep paying more, or at least as much as everyone else that's using the chain, if you want to make sure that your contract is at least looks as popular as and continues to use as much block space as the other real genuine economic activity of the chain. So it's actually pretty difficult to game. One thing I like to compare it to is like the PageRank algorithm for Google, right? Like they design basically how to essentially get kind of the reputation of a web page by seeing what other web pages link in to that, right? And sure, you can kind of game it by paying for links and things like that, but you can also see that as more and more people link to a web page, and you can check those links' reputation, right? Who links there and what kind of link it is. It becomes exponentially difficult to game. It's basically like it's actually a very elegant mechanism design, right? It's basically like a crypto economic mechanism design, but for Web 2.0, right? We designed this because it's kind of like the PageRank algorithm for incentivizing blockchain usage and builders. So like anyone that basically builds a killer dApp on Fraxtal essentially gets the largest amount of the Fraxtal points emission percentage, right? As you should. And it's not like a gas rebate or anything like that either, because there's a few blockchains experimenting with that. But the idea is basically, if you make a really popular app, you're probably going to make vastly more on fees on your app level than getting the gas rebate, especially on an extremely performant, high throughput like L2, right? So that's not going to really incentivize popular application builders, right? Like if Uniswap deployed on Fraxtal will probably be one of the most used, just like on Ethereum mainnet. And they, like on the Uniswap layer, if they fill their fee switch, they flip the fee switch, they'll probably make millions of dollars a day on fees, right? They won't care about the 50K gas rebate that you could give them, because like that doesn't matter to them. By definition, they're the most popular dApp, right? But what could matter to them, and likely will, is if they get 10% of the total emissions of Fraxtal points, because they're taking up 10% of all of the block space over time, right? Like 10% of all of the block space on Fraxtal over time is filled with Uniswap transactions, right? Now you're getting to a really interesting incentive system where you can actually own a part of the chain, the Fraxtal points distribution of the network that you're actually popular in, right? So it's a really unique mechanism, and the idea with building Fraxtal is to bring the Frax Finance decentralized stack, right, to issue the currencies that we're talking about earlier, predominantly on Fraxtal, and then distribute them out to multiple chains, right? Frax, the USD stablecoin, Frax Ether. These are all actually, I think, now on almost 20 different chains. I think we might be one of the most multi-chain issued assets in the entire crypto ecosystem. And the idea there is that we can issue them on Fraxtal, have the deep liquidity, the lending markets, the CDPs, the credit facility, and the whole host of DeFi applications that help us issue it, like Curve, Convex, Balancer, other lending protocols, and everything like that, and then move them out to different chains using the chain different messaging protocols, right? Like L0, like CCIP, and all these things.
Awesome. Yeah, so for people who are maybe thinking about checking out Fraxtal, where would you recommend they start?
Just frax.com. That's the homepage for the network, and it is the home of basically the Frax ecosystem, Frax culture, everything. You can actually, the FNS also just launched. You can get your .frax usernames, everything that you can kind of expect from a kind of sovereign digital nation, right? Like actually, Bology has this concept of the network state, which is like a community, or like a nation, so to speak, of people that are entirely digital, and because crypto allows completely digital economies and actually moving value across borders seamlessly, you can kind of think of sovereign blockchains that have identity, culture, and a sustainable economy, kind of like a network state, right? And so, like, one of the things I like to say is Fraxtal is kind of the network state home of the Frax ecosystem and the Frax community.
Didn't he just buy an island in Indonesia or something?
Did he? I
To
don't know.
I
Maybe he
think he,
might
I
have.
think he, I think he just bought an island in Indonesia or something like that to maybe host events related to network states.
He probably did. I think I saw that, right? Like the network state school or something. I didn't know it was
Yes, that's the network school.
yeah, I saw him post about that yesterday. Actually, I should
Hmm.
message him. He's also like a Frax backer and like
Hmm.
early investor. So that should be pretty cool. I think he has a lot of really cool ideas. Actually, a fun fact is that um, one of the smaller assets that we issue that's more experimental is FPI, the Frax Price Index, and
Hmm.
that's pegged to the consumer price index. It's pretty small, experimental, and people like to use it, but it's still kind of this idea that the real reason that the dollar is valuable is not because the United States has like a nuclear weapons or like this big army. The real reason is it's the most credible to actually peg a unit to a standard of living, right? You can't just have people save in dollars if you threaten them with nuclear weapons or something, right? The main reason is because the economy of the U.S. is the largest, it can actually credibly keep this peg, if you want to think about it, right? Like the CPI peg plus just 2.5% inflation a year, that Fed target is kind of like the peg of the US dollar, right? If inflation goes up, another way to say that is the dollar's depegged, right? Like if the dollar was a stable coin and inflation was like 10%, you could say like the stable coin's depegged to 92.5 cents, right? Because it's off by 7.5% from its like peg target, right? And so the
That's
real
insane.
reason the dollar is extremely valuable is it's really the only thing with the best commitment in the world that can actually make that credible commitment. Sometimes it messes up, right, during COVID, right, when the inflation rate was really, really high. Now it's kind of fixed things, right? The last inflation reading, I think, is like now below 3%. So it's like essentially back to peg, if you want to think of it like that, right? And so one of my earliest conversations with Bology was the idea of, well, eventually stablecoin design will basically leapfrog from just pegging to dollars to pegging to the underlying thing that the dollar is actually pegged to or trying to peg to, right? And we actually came up with the Flatcoin name. Now, if you've heard of Flatcoins, it's basically the idea is like you're flat to a certain reference that's not like a national currency. It's like a CPI or standard of living basket of items. And so FPI was the first stablecoin pegged to the CPI. So it's basically the first flat coin, and it's pretty cool. I think the Ampleforth guys also designed Spot as well. We actually have some liquidity pools on Base between FPI and Spot. It's an experimental currency. It's like in basically R&D project that I think is ahead of its time. But in the coming years, more and more people think about how to expand on stablecoin science, so to speak. I think a lot of people will be studying it and actually using it more, and maybe there's more flat coins design. So just some lore in terms of Bology, like we've cooked in the lab a lot of these concepts and designs, and I think they'll be really impactful. I think I saw a Brian Armstrong interview the other day where he was like, Bology is this super genius. Like he has ideas. A lot of them mostly are right, but they're between like 1 to 5 years early. Like sometimes the next year I realize he's right. Sometimes 5 years later he ends up being right on the money. I think for our idea, like the flat coin concept that I talked with Bology about, I would say it's probably about 5 years. But it was back in 2022. So if you add 5 years to that, it's about 2027, I think, is when just a guess of like when that'll 100x or like explode in interest in usage and kind of intellectual curiosity.
Interesting. I love what you said about stablecoin science. But yeah, once you've got the, you know, multiple catalysts of national debt coming to a head. Sorry, there's a noise in the background here, but you've got national debt coming to the head. You've got more money coming on chain. I saw some stat the other day about the percent of M2 that is now in stablecoins is non-trivial. It's not. I don't know if it's a perfect sort of ratio, but it's interesting to see that, it's like a couple percentage points of M2 is actually in USD stablecoins on chain. And then I know there's some people who argue that you're going to see a dissolving of the nation state concept as it's existed for a while, and maybe return of city states and those kinds of things, or maybe
Well,
network
that
states.
gets to a lot of geopolitics that
Yeah.
I think is a lot of people probably have their own opinions of. But what I do know, and I'm confident about, is a lot of these digital nations will definitely coexist, and how big the
Mhm.
classical sovereign nations will be, or if they'll break up or something. That's an interesting topic for debate. But I think what's not debatable is what you see is that a lot of these digital network states, and hopefully Frax is one of the most prominent earliest ones, and based on the Fraxtal chain and everything. I know that in the next 3 to 5 years will get a lot of traction, and a lot of people kind of identifying with those kinds of online communities. You can kind of see like chains are kind of like sovereign digital islands, right, in the cyberspace of the internet, right? And so you have like name identifiers, you have assets, you have aligned incentives and interests, right? If you hold the actual token, like for Frax it's FXS, for Ethereum it's ETH, right? For other like for Near, the blockchain is Near, TON, Telegram chain, it's TON coin, right? And so you have all of the makings of essentially a sovereign nation, right? And in terms of in cyberspace, you don't need nuclear weapons, right? Like you don't need an army. What you need is digital defense, which is cryptography, right? No one can break numbers, right? And so like that's how it works. And there's actually an old Vitalik blog post from years ago where he says, think of cryptography as digital defense. It's the best type of defense technology, because no matter what kind of army you have, or what kind of computation you have, and these kind of things, you can't break the math, right? And so like you can kind of think of the encryption and cryptography that it runs these chains as their essential kind of digital army. That's kind of how I think about it.
Yeah, and historically, if I'm remembering correctly, cryptography was actually considered a defense technology, where there were a lot of forms of cryptography that were classified, or that you weren't allowed to export, those kinds of things.
Yeah, and actually, like I think what's crazy is like those kind of things have kind of come up again with the kind of crypto regulation, with like things like Tornado Cash, with the right to publish contracts that help people have their right to privacy, right? Like before, PGP, these kind of things on the Web 2.0 in the early 90s were going to potentially be illegal, right? But then from web activism, intellectuals, and all of those movements, that we won that battle, and hopefully we win the cryptography battle again, in terms of the right to publish smart contracts and not be held accountable for what other people do with open source immutable code. So yeah.
A couple final questions before we wrap up. Fun ones. Am I correct? You like to deadlift?
I do. I was on the powerlifting team at UCLA. Actually, it was like formed kind of around the time where I joined, like one year before. So like an early kind of co-founder sort of thing of the team, and I still do a deadlift, bench, and squat, SPD, every week, consistent, and trying to keep going. Now it's a little bit not obviously as young and fit as 10 years ago, but it's still, I always have to, you know, stay consistent and lift and be fit, because I think actually now it's getting really popular, right? If you look at online, like people are into fighting, MMA, and like health is wealth kind of stuff, and it's good to see that, because it's like that wasn't even part of the um, entrepreneurship, startup, online culture and stuff. But it's cool to do. I like to say start doing before it was cool in the startup world. So yes, I definitely do. Actually, today is deadlift day this evening. So
Today's deadlift day. Love it. Already happened or
no,
something we're
later
looking?
later this evening. I wake up in the morning, get on a lot of Frax developer and partnership calls afterwards. Actually, this episode is my last call of the day. Got to do a lot of grinding and work on Frax stuff afterwards, and then after that is deadlift, dinner, and then a little bit of more Frax work, sleep, and then repeat, essentially.
Deadlift, dinner, and DeFi.
Yeah. Oh, that's a good one. Yeah, I'll take that. I'll give you credit for it, though. It's a good one.
All right, I'll take it. No, that's really really awesome. Did you see that thing that went viral recently, where some guy tried to compile S&P 500 CEOs that deadlifted or did a fighting sport versus ones who didn't, to compare the performance?
Yeah, yeah, that was a super cool one. I hope someone does that for crypto tokens and like cryptocurrencies. That would be really cool to see. And I think Frax would probably make near the top of the list in terms of the lifting to market cap ratio. But yeah, it's super cool to see that. Like I said, like now Zuck is like taking pictures with like MMA fighters and UFC
Mhm.
fighters and stuff like that. And I think it's a great and cool culture shift that hopefully the pendulum doesn't swing back the other way, right? But it kind of gets
Mhm.
nerdy, cool, and like now it's like a good mix. So
Mhm.
hopefully it stays that way.
Yeah, totally agree. I'm avid lifter myself. Um, Final question: if you were starting another business today, besides Frax, what would it be?
That's a great question. Honestly, so actually the thing to say is that it would probably be in like the very similar like area, maybe like crypto and AI. But uh, the caveat there is I think I'll be, working on Frax for the rest of my career, because the vision is very long term. It's a multi-decade vision of being the decentralized central bank of crypto, and one of the largest, sovereign chains. And the main thing I actually like to think about is, Ethereum just turned 10 years old today. Was it 2014 is when Vitalik, came up with the idea and released the white paper and stuff. And I actually like to do this thought experiment of like, imagine if like Vitalik, like 4 years ago, had came out and said, "Okay, guys, I'm done with like Ethereum. Like I've decentralized it, and now I have a new token called like rollup, like ticker roll, and it's supposed to, it's supposed to scale Ethereum. Like this is how you pay for like blob space or rollups, the DA, whatever it is." He could raise like $10 billion for that, or more, right? Like he could just do so much. Thinks he's freaking Vitalik, right? But he's so long term oriented, right? That it's from that kind of multi-decade vision of doing something that requires both discipline and not thinking, oh, like could probably make $1 billion by doing, because Vitalik can, right? Like he's freaking created the second largest digital asset after Bitcoin, right? But he doesn't, right? And I think that that's very important in terms of if you have a vision and something that you really genuinely want to work on, with a good team and a good community that's growing, and people that recognize the brand, identify with the culture, the name, everything like that, you stick to it and execute on the multi-decade vision through the hard, the good, the bad, the slow, the fast. And so actually, like, I'm very interested in like crypto x AI intersection. I actually think, like, for example, on-chain enshrined agents, like agents that actually can own their own digital assets, do DeFi, AI-fi, for example, is the thing that'll take off in the next 2 to 3 years a lot. Still a little early, right? Hallucinations, like doing stuff that you don't want the agent to do, losing all your money or things like that. But all of those will be fixed. So instead of like going and being like, hey, I have a new project, so like I'm gonna raise a bunch of money, and like what I think the thing, for example, we want to do at Frax is have a few very direct partnerships in this area. So actually, there's a new team called Omo Protocol, and there's Atama, and there's a few other AI crypto teams, and obviously IQ, the project that I helped found before, that is working on-chain agents and enshrined agents, and I like to call it AI finance, or agent continuity, like an AI that's actually on-chain, has its own addresses, can strategize about financial transactions and things like that. Instead of going out and doing it, the best way to do it is make Frax the biggest possible vision and execute on it over a long period of time, and work with people that you think are building the next big thing, right? If you think about it again from the Vitalik situation, right? He could look around and be like, oh my God, there's people like doing the coolest roll up things, and actually I could do it better, right? Like I can launch my own second token, and but he doesn't, because his vision is multi-decade long, right? And so I think the best answer to the question is I would still be working on Frax, and what I think is going to be basically my crypto career. But I'm very interested in working with aspiring teams that are doing bleeding edge research and development in the intersection of like AI and crypto. We would love to bring them on Fraxtal, or help them launch L3s on Fraxtal, L2s, whatever it is that's part of their unified vision, and help build that and deeply integrate with Frax, and hopefully have them make a huge difference in the Frax ecosystem, and the Fraxtal digital nation on chain.
Incredible. Thank you for coming on, Sam. This has been a fantastic interview.
Thanks so much for having me, Patrick. Hope to come on sometime soon.